Hello, I'm Vinny Catalano and welcome back. What exactly does a Chief Investment Officer do? Well, today we're going to find out with a very dear friend of mine and an excellent Chief Investment Officer, Vahan Janjigian. Vahan is a CFA, charter holder, he has a PhD, and he's instructed courses, and he is now Chief Investment Officer with Greenwich Wealth Management, I believe it is?
Yes.
Vahan, welcome.
Thank you very much, Vinny.
Tell us a little bit about you, what you do, a little bit of background. You were with Forbes for a while, Chief Investment Strategist with them. Let everybody know a little bit about you.
Well, I started off my finance career as a professor. I was a professor at the University of Delaware and then at Boston College and Northeastern University. And I taught primarily corporate finance and investments. And then I joined Forbes as the Chief Investment Strategist and the editor of an investment newsletter. So I recommended stocks on a monthly basis, and proud to report that according to an independent source, I was the best stock picker over the 10 years that ended in 2012. And then I started getting approached by people who wanted me to manage money for them. So I joined Greenwich Wealth Management in 2010, and now I'm managing money for my own clients and also providing advice to the other advisors at the firm about asset allocation and portfolio management and individual securities.
Good, great stuff. Greenwich Wealth Management, type of firm it is?
Greenwich Wealth Management is an investment advisor. We currently have about $1.6 billion under management. Most of our clients, I would say, fall in the high net worth category, but we do have a handful that are ultra high net worth. And most of the people in the shop manage money using exchange traded funds. I use ETFs as well as individual stocks. We manage all the money in-house. We don't use third-party managers, primarily because we feel that we have the expertise to do that, and we are very focused on keeping fees as low as possible.
Excellent. We're going to get to a little bit of the individual stock selection and your excellent track record, how that all comes about. Talk about your job, your day job. What does a Chief Investment Officer do?
Well, I don't know what a Chief Investment Officer at other firms do, but I can tell you what I do. We're pretty much a group of independent advisors who are all working under the same umbrella. So for the most part, I spend most of my time managing my own clients' accounts. I'm constantly analyzing securities, looking for good stocks to buy, worried about things like the asset allocation in their accounts. But I'm also advising the other advisors at the firm as to what stocks I like if they want to put their clients into those stocks.
You advise them on asset allocation strategies too?
Sometimes it depends on the individual client. I mean, we have quite a few people there who have quite a bit of experience and expertise, and they oftentimes don't need my advice, but they often do come to me when they want to know about individual stocks. They want to know what stocks I like, what stocks I think might be appropriate for their clients at any moment in time.
How do you manage that blend of top-down analysis and bottom-up analysis? Because, successful individual stock picking has a lot to do with that bottom-up analysis, but it also meshes in the top-down approach. So how do you reconcile the two, make them work?
Well, the first thing we have to do when we get a new client is we have to really decide what is the proper asset allocation for this client. So we're trying to determine how much risk can this client actually bear and tolerate.
Like that, sure.
So, and to do that, we need to know, where they have the rest of their money invested as well. And we want to make sure we're not duplicating anything to give them too much exposure to any particular area. So once we get the asset allocation down, suppose we decide that this particular client should be 60% in equities. The next question is, how do we get that exposure to equities? And we use a combination of exchange-traded funds and individual stocks. Now, when it comes to the stock picking, I really don't use a top-down approach. I'm more of a bottom-up stock picker. My view is that every client should have some exposure to equities at all times. So the only question is which equities, and my view is they should always be invested in the equities that are undervalued. So I spend a lot of time doing things like discounted cash flow analysis on a very conservative basis, trying to find stocks that are undervalued. So Yes, I pay attention to the overall economy, and I'm concerned about what sectors might do better than other sectors. But if I find a stock that's in a sector that is actually out of favor and it's very cheap, I think it's a buy because I have a long-term view. I'm not looking for stocks that are going to do well over the next 5 or 6 months. I'm looking for stocks that are going to do well over the next few years.
Right, over that longer cycle, and hence you are authoring a book a number of years ago, Even Buffett Isn't Perfect?
I did, yes. I authored that book, and I talked about many different investment strategies in there.
Excellent.
And I talked about Buffett's investment strategies as well.
And excellent, excellent. The use of ETFs, are you using them from a sector exposure basis? One of the things I talk about is, when I get asked, how do I play the water resources, like one of my favorite areas, I would say, okay, use one of the ETFs or several ETFs, and then if there are individual issues within it that you want to place individual bets on, then you pick them out. How are you using ETFs in this regard?
I would say very similarly. Like, for example, I do not buy individual foreign stocks. So when it comes to international exposure for my clients, I use solely ETFs for that.
Okay.
And also in particular domestic sectors, I find financial companies, for example, I find banks to be very difficult to analyze. So instead of...
different methodology.
There are, yeah. And so instead of picking individual banks, what I'll do is I'll use an ETF to get my clients exposure to the finance sector. I'll sometimes even do that with utilities. I've been very bullish on utilities for the past few years, but I did not want to pick the actual stocks, so I've been using a utility ETF, which has done extremely well for us.
Sure.
So it depends on the situation.
And do you do any investing from a thematic point of view? That's kind of a thing that, like in my area, I love that area, and we have a committee over here, the Global Thematic Committee. And like I mentioned, infrastructure before water resources, that kind of thing. Do you take any of that into consideration in your decision making?
No, I would say not. I would say not. I'm really more focused on finding undervalued stocks, regardless of what industry or sector.
Whatever industry, whatever theme that might be there, et cetera. What about things like behavioral finance and things like technical analysis and stuff like that? When I conducted this interview with Phil Orlando not too long ago, he made mention of the fact that he takes a little peek every now and then at the technicals, the entry points, exit points, things like that. You do any of that at all?
Well, personally, I'm a strict fundamentalist. However, we do have a couple of guys in my office who are big on technicals, and they pay attention to the charts very closely. And oftentimes we confer. If I like a stock based on the fundamentals, I'll bring it to their attention. The first thing they'll do is they'll look at the technicals. If they like the fundamentals and the technicals, then they consider that a strong buy.
And then blend together. But you don't do that. You yourself
I don't pay much attention to the technicals.
Okay.
I do believe that technicals are useful at times, and I do believe that behavioral finance is a useful exercise. However, in my opinion, these are really more short-term things. Right. And as I say, I don't care if a stock is undervalued and is going to take several years to come up to its proper valuation. In fact, I often prefer stocks that go down in value soon after I start buying them, because I never commit 100% to that stock right away. Okay. I'm hoping it will actually go lower so I can average down.
Your purchases at there. We just have a few seconds left. Do you look at the overall portfolio from a sector tilting perspective? In other words, you get started, you have a bunch of great ideas, and let's say you have another great idea in a given area, but that kind of like really bumps you up in that sector as an exposure.
Well, actually, the answer is yes. In fact, a few years ago, I started becoming very bullish on pharmaceutical stocks. Okay. So I had some pharmaceutical stocks in many of the portfolios I managed. I decided it was time to tilt even more toward pharmaceuticals, and so far that's paid off pretty well for us.
Excellent, excellent. Well, I hope you found this to be very useful. This is absolutely wonderful opportunity that I've had to explore with an individual who is really quite accomplished in this field, and this is pretty good stuff. Thank you, Vahan.
Thank you, Vinny.